The price of Bitcoin currently is 67,956, and where is it going to next? To answer this question, let's pop on the structural levels so we gain a deeper understanding as to where smart money is buying and selling. There's a substantial amount of structural support at 66,900, and you can see there are many safety nets below the current price. This is really good. Bitcoin has been trying to get through the 66,900 mark for a while. Now, what is happening with Bitcoin's price at the current time? The answer to that is not inside Bitcoin's chart, it's inside the other charts, especially the DXY, the US 2-year and the US 10-year. I covered off all the intercorrelations and interconnections to watch inside the service video for this month, and many thanks to Mangi for your kind comment. The current momentum inside Bitcoin has raised the possibility of challenging this 71,800 level. If we get above this and start to move, this Bitcoin could do incredibly well. And many thanks to Wabi Sabi for your kind comment also. Congratulations, my friend. NDP 5072 had a really good comment in yesterday's video. When do we expect a pullback? The answer to this question isn't as obvious as it might seem. The only way to detect a pullback is to look at the intercorrelations and interconnections between charts. So let's do that. The charts that we need to look at are the Tier 1 charts. These are the engine of financial markets globally. If the DXY is breaking down, expect Bitcoin to be rallying, expect gold to be rallying, expect the stock market to be rallying. When we look at Tier 2 and Tier 3, we can use these to confirm what the Tier 1 charts are doing. If the DXY is coming down, and the US 10-year yield and the US 2-year yield are also coming down, expect gold to be going ballistic as well as Bitcoin. If Bitcoin is going ballistic, expect the sub-alts or the altcoins to be going ballistic too. When the alts go ballistic, it's just a fantastic sign that Bitcoin has found a degree of support inside the markets. It's not only the Bitcoin ETFs that are pumping up Bitcoin at the current time. One thing that we can see with the DXY, it's following the normalized negative price path, but you can see it's getting weaker. And this weakness or deviation from that normalized price path is what's causing the markets to rally, especially Bitcoin and crypto. Keeping your eye on the DXY is very important, and when we look at the normalized negative price path for dollar-yen combination, we can see the dollar-yen had some degree of strength, but it's now become weak. This is because of the DXY. It's also really important that we look at the US 10-year yield. The US 10-year yield can be thought of like a mortgage rate. And when we look at the normalized negative price path, we can see that the US 10-year yield is going negative. It's just slightly below that path, but it did deviate quite substantially on a number of occasions. This is showing that markets could gain enormous strength if it continues. Keeping your eye on the US 2-year yield is very important as well. You can think about this like your savings interest rate. We can see that the negative price path is starting to look attractive to the US 2-year yield. And when we throw on the indicator, we're looking for positive gaps and negative gaps in structural support or resistance. When we pop it on, we can see something really interesting. The US 2-year yield was trying to maintain this support around 4.54, but you can see it's getting weaker, and we've got it's on the verge of a negative fresh air gap that could take it all the way down to 4.39. Remember that these parts are not trying to predict price, they're trying to predict price at the end of the month and give you some kind of concept as where price could go under the three conditions: negative, neutral, and positive. Silver and gold can give us very good indications as to DXY and yield strength. When you look at silver doing this, you can expect that the DXY and yields are doing that, and that's exactly what they've been doing. And when we look at gold, we're seeing exactly the same thing play out. Gold is really going for it because the DXY, the US 10 and the US 2 are coming down. It's realistically that simple. There's a little bit more to gold, of course. Geopolitical tension and risk is something that gold is very sensitive to. Gold loves a drama. When zooming in to gold's price, we can look at the structural levels on gold and we can see at this 2151 it's been really well supported. Once resistance has turned into support, this looks a lot like Bitcoin's price action. Very interesting. There's another structural level of support at that 2144 and there's more levels of support below. When we think about overhead structural resistance, the 2170 mark and 2173 mark are the ones for us to watch. And it's fantastic to know where the actual structure is because you can make informed decisions. If you would like this indicator, it's available at CTKSMethod.org. Looking at total crypto market cap, we can't really assess much of what's going on unless we know where the structure is inside the market. And we can see right now we're above structure. We have a degree of structure at that $2.46 trillion mark. We're currently above it. But look at this, from 2.54 up, it's really going to be tough for the alts to rally up. And we know the alts have been rallying. The meme coins have been going absolutely ballistic of late. If total crypto market cap falls because the DXY and the US 10, the US 2 find their bounce, we could come back into structural support around here, and you can see that it's an enormous buying opportunity. When predicting pullbacks inside market price action, you need to keep structure in mind and the intercorrelation and interdependencies between the Tier 1, Tier 2 and Tier 3 charts. The other thing to keep in mind, when price does retrace, a lot of people sell and they tend to buy as it's confirmed that it's coming up. So people tend to buy around here and sell around here, or buy around here and sell around here. Buy around here, sell around here. Those losses are going to accumulate. You want to actually invert that thinking. You would love to get in down here. I always say people want to buy the bottom, but when the bottom is hammered in, there's just no one there. Except, of course, for the professionals. The professionals love to buy on red. They're doing that. They're also cycling around for high annualized return on investments, which is very different from ROI as normal people understand it. But you don't have to be a trader to take advantage of this. People talk about dollar cost averaging all the time. How do you DCA into something? Well, a lot of people say, well, I'll just buy here and buy here and buy here and buy here. Well, you'd probably be better off to buy there and buy there and buy there. What does this mean? This basically means you want to borsog. What the heck is borsog? It's buy on red and sell on green. Sell on green is not an automatic thing. As an investor, you can have your targets, and the bull market is pretty much mid-market at the moment. It's only getting started. And please be aware that a lot of non-traders, a lot of investors think that in order to make money by trading, that you take money out of another person's pocket. This is just absolute rubbish. It is not true, and it never was true. Everybody thinks that trading and investing, trading is a zero-sum game. For example, if you buy there and you sell there, you're taking money out of another person's pockets. But if this was a 20-year time horizon and you bought there and sold there, are you taking money out of another person's pockets? You're an investor. No, you're not doing that. The concept is that investing and trading are the same operation. You're buying and you're selling. You simply have different price targets and different holding periods. When you look at trading, never ever assume that when price goes down, there are a lot of people that would want to get into that price action because all the institutions say, don't catch a falling knife, don't catch it, don't catch it. Why? Because they're getting on the right side of the percentage. They want you to have a retail mindset. Retail mindsets say, I can never make a loss, therefore you can only buy on green. You can see how insidious and how devastating to your portfolio this method of thinking is. If you never make a loss, you have to be guaranteed that the price is going up and up and up. And by the time that you are satisfied that it's going up, it's probably going to retrace and you're likely to sell. After all, the golden rule of investing, never make a loss. What rubbish. Please do not be conned by these ridiculous words. Professionals always buy when there's blood in the streets, especially their own, because they know that this is the time to get into the market. If the market is moving in pretty much the right direction, it's going up. Therefore, you can buy and you can know that you can sell. And price is always moving in a wave. It's coming down and it's going up. It's coming down and it's going up. So even if the overall path and trend is up, you're going to experience pullbacks, rallies, pullbacks, rallies, pullbacks. Please get the concept like this, and you're going to do incredibly well. But you will need skill when it comes to trading. Trading is all about timing, and timing is all about structure. Where is the structure in the market? Why do things top out? It's not about guessing. It's not about gambling. It's about playing the probabilities. I would suggest that the most important thing that you can possibly do is to understand where the structural levels are. Make sure you're marking up all of price history in the most statistically significant manner possible and obey the international standards of level 1 and level 2. That way, if you see price coming into structural levels, you're not going to freak out. A lot of people would look at negative price action like this and say, oh no, I got it wrong. It's supposed to be going up and up and up and never come down. You know that's not the truth. You just look at price action. It's up and down all the time. And crypto is known for its exponential volatility. Crypto is an exponential asset class. What the heck does that mean? It means that if you had a pond and in 30 days the entire pond would be covered in algae and the algae was just doubling from one day to the next, on what day out of the 30 days does the algae cover 50% of the pond? Well, people would say, of course, in the mid-month, 15th. No, it's on the 29th day. That's exponential. It's doubling. In order to be half the pond, that occurs the day before the end date. This is crypto. It's like the algae that grows on the pond. As a bit of a bonus, when you're going through the marked up structural levels, and say we're looking at Solana's ecosystem, we're looking at the oracles, infrastructure, the memes, DeFi, the DEXs, and others. What you can do if you understand where Solana's structural levels are, you can look at the ecosystem and start identifying projects that are exhibiting a lot of strength, such as JUP. And JUP did a lot of strength recently. And also Radium. So Jupiter and Radium have been doing really, really well. Part of trading is identifying opportunities, but you must look first at the structure of the underpinning ecosystem driver. In this case, it's Solana. If you know where Solana is going and you're observing that there's strength occurring in subsections of the ecosystem, you want to lean into those areas. This is how you apply your knowledge of the major marked up structural levels to other projects. It's a fantastic way of going. You might be curious why the crypto market has just retraced as we filmed this video. How interesting is this? We've seen the DXY come down into a level, but what is the structural level accounting for nearly 21,000 days worth of data? I'll pop on the indicator. When we put on this indicator, what are we actually doing? We're showing where structure is. The DXY has come into a structural level, a structural support level. This may ping it back to the higher structural resistance before it keeps on coming down if that negative bearish momentum continues on the DXY. This will create a great buying opportunity inside markets such as crypto, which trades 24/7. If you would like this indicator, you can grab it at CTKSMethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.